Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, August 20th. Moving next to NYMEX oil, and here we've seen the buyers come back into the market today with this white body candle. The low of that candle is very close to the low of the previous candle. It's suggesting that this could be very close to being a tweezer's bottom, and that's a Japanese candlestick reversal pattern. It's suggesting a very real possibility of a change of trend to the upside, and it's almost a bullish harami pattern, not quite though, because the body of the current candle is not within the body of the previous. But the story here previously was about the sellers being in control, trading through these important support levels, but the buyers have now come back in fairly strongly, with the buyers taking control of the market, opening up towards the low and closing up towards the high, and taking out the 93.25 level of potential resistance. So there is a possibility of the market trading higher. Now if we do trade higher, potential resistance at 94.63, and then if we do trade there, we're likely to see extremely strong resistance at the Tenkan Sen indicator at 95.60. But we do have a bearish market in all three timeframes by trading below each of the Ichimoku indicators. And if we recall, looking at the distance of price action away from the cloud and the Chica span away from the price action, it suggested the market was looking a little overextended. So some congestion or perhaps a retracement here wouldn't surprise. Now just looking here at the MACD histogram, and here we have triple divergence that's been set up, and it suggests that the market is looking very overextended in terms of the lack of momentum. As we're making these series of lower troughs, we see the MACD histogram making either equal troughs or higher troughs, and certainly for this last trough that the market's made, we have made a distinctively higher trough on the MACD histogram. So what it's saying is that even though the market looks as though it's healthy trending down, the power of the sellers is certainly not matching that. We have something of a hidden lack of strength in the market, as it's not increasing the amount of momentum as we're making these lower troughs in the market. So it suggests that there is a possibility of a change of trend, or certainly some congestion coming up. And that really does depend on how the market reacts here following this bullish candle. But it does suggest that with this potential tweezer's bottom, almost a tweezer's bottom, not quite a perfect one, that there is potential for that change of trend back to the upside. And just looking at the Bollinger Band technique, the bands are very wide here as well, so we had something of a squeeze up here, very strong downtrending price action, the various bands and the middle band acting as resistance and or support. The resistance here in the downtrend, support in an uptrend, but there is potential for the market here to find resistance at the bottom band at 94.80 at the moment if the market does rally up to there, and then potentially for the sellers to come back in if they are strong enough, as we've seen here in the recent past.